where is their money? I think the U.S. pension plans, George, you're right. I think, they have sort of rebalanced, but
they're not in any hurry.
No, they're not in any hurry at all. So CalSTRS, may have rebalanced, and, I think they're saying to people that they are back in the market, at least are prepared to look at things. But, I got to tell you, there's a certain amount of career risk that comes along with wanting to jump right back in. And the fact is that things still are quite uncertain in terms of valuation and whether valuations will continue to go down, particularly on the private side. Peter, your question is actually timely. I was up in Toronto yesterday. We were with a couple of the very large public pension plans, the Canada Pension Plan, which is roughly $120 billion in assets under management and growing at a tremendous rate. And also the Ontario Municipal Employees Retirement System, which is also known as OMERS. They've got something like $50 or $60 billion under management. They've got money, and they've got money to invest. Everybody's got a certain level of legacy problems, but for the most part, they are very, very bullish on the opportunity, and particularly the opportunity in the United States and internationally. The Canadian currency is quite strong right now, and the Canadian economy is pretty strong. Their banks are strong. The economy itself never got as levered as the U.S., so they're quite bullish. So that's one example of where there is money. The sovereign wealth funds, I agree, are looking at the opportunity. I don't think you've seen the movement in. There was, I think a year or so ago, a number of guys jumped in, and they probably jumped in prematurely, sort of the falling knife syndrome. So I think they have pulled back. I think 2010 will be a much more interesting year. So let me jump to the second half of the question. And what vehicles will people be looking to invest in? Really, I think it's going to be all of the above. I think one of the key considerations of the past 12 or 18 months for everybody has to be liquidity. In addition to valuation, it has to be liquidity, particularly for the endowments and the pension funds. And I think that if you look at the U.S. Investment universe, U.S. investor universe, it's been a very tough year for them because of the liquidity issues of investing heavily in either private equity vehicles, real estate, or otherwise. And I think what you've seen really over the past year with all of the REIT activity, public REIT activity, one of the reasons that investors have been migrating towards that part of the business is the liquidity that is inherent in public ownership. And I think if there were ever any doubts about the efficacy or efficiency of the public ownership model, certainly the year 2009 has proven that that model is here not only to stay, but to thrive and to grow very strongly. So I think you're going to see a lot of, whether it's institutional capital, sovereign wealth money, I think you're going to see them coming in and oftentimes coming in through either a direct, say a registered direct type of an investment with public guys, or else in some other vehicle, whether it's a joint venture, whether it's through a discretionary type of a fund. You're going to see a lot more of that. The transparency is there with the public guys, and the governance is certainly there with the public guys. Does that suggest that real estate private equity is dead. No, I don't think it suggests that at all. But it does suggest that the model has to be rethought, in my view.
John, what do you
I think what distinguishes anybody during a period that we're going through is, as much as anything, it's not how you perform in good times. Everybody does pretty well during good times, the rising tide. It's really how you perform during bad times. How do you treat all of your various stakeholders, whether those are your equity investors, whether those are your lenders, whether those are the people that work for you. What we are witnessing is, I think, a real separation in that regard. And the firms that will endure and come through this period of time are the ones that are being completely transparent, that are not claiming victimhood, because in life there are no victims, there are only volunteers, and they're the guys that are standing up and taking their lumps, working it through with their lenders and working it through with their investors. So those are the type of people that we're trying to work with, and I know that those are the guys that are going to come through this thing in pretty good shape.
think